Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's going to help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video. What is going on, everybody? Welcome back to another dividend video. This one is going to be on LTC properties. And this is one that I actually just got messaged yesterday on, so I figured I would go ahead and get this video going. I actually hadn't heard of this one for some unknown reason. I'm very interested in this one now myself, so I kind of just want to go over things that I would look at and things that I would hope that you guys would be looking at, such as financials, things like that. And then one of the other things that I think is very important that a lot of people don't end up going over is the whole, is this appreciating or at least staying flat? So if you look at LTC properties, they've actually been around for quite a while, which is a good thing. We talked about this in the last video. If you guys haven't watched it, go ahead and watch it. But this one where, it's actually had time to see if they can actually manage a portfolio, see if they can create income, things like that. And we're going to look through all of that. So this one obviously was incepted in around 1994. It's going to appreciate with real estate because of course real estate went up. Now this one's a little bit of a different REIT. Now it is a REIT technically still, and it's going to pay a monthly dividend. Now when we go to this monthly dividend, and this is something we always look at, we look at the actual price. So $34.15, which is not a bad price at all for this one, I don't think. And then you look at the dividend that it's paying out every single month, and it's 19 cents. And if you look at its past, I don't know if it's going to show it on this one. Yeah, it does. So it was 17, and then we got up to 18, and now we're up to 19. And this one does seem to keep upping its dividend, which is good. You want to see something that's actually either going up in dividend or just staying absolutely the same. I prefer to see it go up, but I'm okay with seeing things stay the same as well, as long as we're not decreasing. When things start decreasing, you know that it's not in a good state, like when Ford or others cut their dividend, like Disney cut their dividend during the pandemic. You knew it was not a good sign. They were trying to hold as much cash as possible in order to keep their businesses moving. Now, with that being said, LTC is a little bit of a different REIT. We went over O Realty, which of course goes over Walmart's, Walgreens, Dollar Generals. They own all these commercial real estate buildings in order to generate that income for you guys and pay you every single month. Now, you're obviously thinking, well, this one definitely has a better return on its money. And yes, I would agree 100%. You're looking at the yield is about 6.88% over here. So I do like that one when it comes down to that. It's going to pay that monthly dividend, which we all like, that cash flow. Don't lie to me and tell me you don't. So with that being said, though, there's always an important part is where are they getting their money? If they're not buying commercial real estate like Walmart's and things like that, where are they getting their money? And this is kind of where I want to pop up this chart real fast. And this is going to show everything where they got paid. It's only missing one of them, and it's because it cut off, and it's CareSpring Health, which is actually right down here. It should be right below this one, but for some reason it cut off. So the LTC properties is actually going to focus in nursing homes, triple net leases, which if you don't know what triple net leases are, they are basically where whoever rents it off of you, that building off of you, they take care of absolutely everything, the maintenance, the upgrades they need, everything for you. And that's why people like a realty, is because those are triple net leases as well. Walmart takes care of absolutely everything to do with their buildings, their upgrades, everything. And that's why, again, people like triple net leases, and you see them a lot when it comes down to big real estate deals. So when it comes down to these, though, again, you're not looking at Walmart's, you're looking at healthcare, you're looking at senior lifestyle, assisted living. And I know this industry, I know people that work in this industry, and it makes a lot of money. And that's why, again, this is one that I was actually very interested in when somebody brought this one to me. But again, we want to make sure it's going to be able to compete with everything else. So it's got all your income coming in. We can get rid of this now. And we're going to go back over here. And you guys can go to the LTCREIT.com, I believe is what it's called. This one's ir.ltcreit.com. And you can go over the insiders owning and everything else like that, and you can just go through all these. It'll give you documents, it'll give you its 10K and 10Q and go over everything and show the cash flow. This one is very good at cash flow so far. Again, make sure you're looking at these two. 6.62 dividend. That's what it's showing on Seeking Alpha as well. If you guys didn't know, this is Seeking Alpha. It's a great free tool to use. But now let's go to where we always go to make sure we know what's going on here. So I've already put this one in here. You guys can see LTC. We're going to compare it to PTY, and then SPY, which is the S&P 500. And again, we're going to start with $1,000. We're going to contribute $500 a month. Where do I get that $500 a month from? That's what the average car payment is. So if you sell your whatever your vehicle is and you learn to just drive a clunker for a little while and save up some more money to buy another vehicle cash, this is, kind of where you should be at, and you should be able to easily make that payment. If you can drive a nice vehicle and make that payment, congratulations, you're doing a little bit better. But that's not everybody's at that situation, and I understand that, so that's where I got that number. So this one right here, you guys can see all three of them stay very, very closely together, and you just keep going. And this is only going to show up from 2010, obviously, down here. But the biggest thing that I see here is that LTC is going to dip off a little bit. Now, their income obviously is going to be up, and this is something that I do think everybody should be looking at. And I think this is a stock that I wouldn't mind throwing a few grand at and letting it hold and letting it basically compound over and over and over again without me ever touching it. And then, you know what, if it doesn't perform the way I like it, or when I'm going through managing my account and I don't like the returns that I'm seeing other than the dividend, I think it's going to continue to fall because we have a real estate bubble and things like that. Yes, we'll go over real estate in another video, but you get what I'm saying is I would probably cut LTC properties and put more into other stocks that are more risk management. Now, LTC is obviously going to outperform SPY when it comes down to the dividends because you're getting that monthly dividend, and you're going to get a lot more dividend based off of the price. And then again, it's a big thing. Now, obviously, PTY is going to do better because you could buy more shares with less money and get more payment. So PTY is going to outperform it in the dividend. But LTC does look like to be a solid dividend. Now, again, this is the biggest thing right here, it looks like. And yeah, right here's where I wanted to go through. SPY, you'd have 203,000. PTY, you would have 186,000, which isn't too far. But yes, it's a little bit different. But you're going to get a lot of monthly income off this. That's what the trade-off with PTY is you're getting that monthly income no matter what. So if you're trying to live off of it, you can definitely live off of PTY a lot better than you can on SPY. And then you got LTC, and this is kind of disappointing to be 100% honest with you, because between PTY and SPY, you have a little bit different. Obviously, there's, what is that, like 17 grand difference. Right here, this is a big difference. This is almost 90 grand difference in LTC and SPY, and then PTY is what, almost $80,000 difference? Or no, it's almost $70,000 difference. But that is that's a red flag for me, even though I do think that this company does seem to be a solid buy. If you want to grab a few shares of it, I'm never going to say, hey, take this one and absolutely run with it. This is the one that you need to be buying. I don't believe LTC should be your number one stock in your portfolio, but it is something to definitely keep a hold of if you want to diversify into some more real estate and you want to get into the assisted living, senior health care kind of income. But with that being said, guys, thanks for watching this video. If you guys have any other questions, please leave a comment. Let me know. I'd be more than happy to help you guys out and give you my honest opinion on any stock. With that being said, I will see you guys all in the next video.